Welcome to The Mortgage Brief, a podcast filled with mortgage loan information at your fingertips. This show is for the first-time homebuyer, the move-up buyer, and the current homeowner looking for residential lending tips and tricks about the home buying or refinancing process. I'm your host, Jason Ammon from Guild Mortgage. I'm a licensed residential mortgage loan officer with 20-plus years experience, and on today's show, we're talking about 5 tax benefits of buying a home. So stay tuned. We'll be right back. In the spirit of tax day, let's talk about 5 tax benefits of buying a home. The tax benefits of buying a home are one of many advantages of homeownership versus renting. Tax breaks for first-time homebuyers are either deductions or credits. Both can save you money, but what's the difference? Tax deductions are expenses subtracted from your income before you figure out the amount of tax you owe. Tax credits are subtracted from the amount of tax you owe. We'll break down what is tax deductible when you own a home. Number 1, mortgage interest deduction. For homeowners who itemize, the mortgage interest deduction can be a significant tax perk. That's because it can reduce your taxable income by deducting the interest paid on your home mortgage. The Tax Policy Center estimates that 14 million homeowners took advantage of this tax break in 2018. Number 2, mortgage points tax deduction. Points, quote unquote, are essentially one-time prepaid interest charges on your loan. The more points you pay, the lower the interest rate on the loan, which can reduce your monthly mortgage payments. Borrowers can typically pay anywhere from 0 to 3 or 4 points, depending on how much they want to buy down their interest rate. Discount points may be tax deductible as home mortgage interest if you itemize your deductions. In addition, according to the tax information for homeowners published by the IRS, quote unquote, the buyer may deduct points paid by the seller, provided the buyer subtracts the amount from the basis or cost of the residence. Cost basis is the original value or purchase price of the property. Number 3, property tax deduction. A property tax is a tax assessed on real estate by your local government, usually based on the value of the property you own. Property tax revenue pays for roads, schools, libraries, snow removal, and other municipal services. After you close on your loan, you may be eligible for a property tax exemption or discount depending on where you live. For example, some states offer property tax exemptions for the disabled. In other states, some homeowners 65 years of age or older qualify for a dollar amount exemption. And still in other states, a disabled veteran may receive a full property tax exemption. Once you've learned more about the laws where you live, contact your county or town and file for an exemption or discount as soon as possible. Number 4, residential renewable energy tax credits. This federal tax credit may be an incentive to homeowners looking to make improvements designed to boost energy efficiency. Geothermal, wind, solar, and fuel cell energy systems may be eligible. You can read more about this on my blog entitled Tax Credit Amount Requirements and Qualifications. Number 5, home improvement tax deduction. Certain home renovations increase the value of your home, and some improvements can even lower your tax bill when you sell. The IRS lets you add capital improvement expenses to the original value or purchase price of your property, reducing the size of the capital gain when you are selling. The National Association of Realtors notes that this tax benefit doesn't come into play for everyone, but if you plan to live in your house for a long time or make lots of upgrades, saving receipts could be a smart move. Some examples of eligible improvements include a new roof, heating and air conditioning systems, attic insulation, and kitchen modernization. Property tax deductions and energy tax credits are just a few of the tax benefits of buying a home. You may also be eligible for other tax breaks such as home office expense deductions or deductions for medically necessary home improvement. For further guidance on reducing your tax liability, consult a tax professional regarding your specific tax implications. If you have any other questions regarding this, please reach out. I'd be happy to have a one-on-one consultation with you. Thanks for tuning in to today's show. If you would like more information about this topic or any topic related to the buying or refinancing of a 1 to 4 unit residential property, please reach out to me or my team by visiting my website, www.guildmortgage.com/Jason Ammon. That's JASONAMMANN. You can also find us on Instagram under the handle @JasonAmmonGuildMortgage and on YouTube under the same handle. Thanks for tuning in, and we'll see you next time right here on The Mortgage Brief. Guild Mortgage Company, Equal Housing Opportunity, NMLS number 3274. Jason Ammon, NMLS number 126651. I'm licensed to do business in the state of New Hampshire. The information provided today is for educational purposes only. Position, strategies, or opinions of the show do not necessarily represent the position, strategies, or opinions of Guild Mortgage Company or its affiliates. Each loan is subject to underwriter final approval. All information, loan programs, interest rates, terms, and conditions are subject to change without notice. Always consult an accountant or tax advisor for full eligibility requirements on tax deductions.